Last week, the Wall Street Journal wrote that, quote, China's 40-year boom is over, with the rest of American media following suit.
China's yuan is at a 16-year low, and the country appears to be experiencing deflation. Economists say these are signs China could be facing an extended economic downturn.
So where did China go wrong? I've done a couple recent videos on China's stalling economy, with manufacturing and the trillion-dollar home building industries crashing, as well as on the Chinese government's panicked response, from ordering banks to buy stocks or to buy the Chinese yuan, to going dark on sensitive statistics like youth unemployment. Put it together, and China was 77% of U.S. GDP just a couple years ago. Now it is headed to 68%. So what's causing it, in short, is crony and incompetent government that routed trillions to politically favored industries and state-owned enterprises, which are as badly run in China as they are everywhere, while suppressing the very entrepreneurs and markets that brought China out of the gutter these past 40 years. The New York Times describes it as using regulation as a, quote, cudgel, clamping down especially on internet companies or financials like Alibaba and Ant, whose billionaire founders were seen as challenging the Communist Party's authority. Now, for the first time since the 2008 crisis, regular Chinese are losing confidence that their government has a handle on things. Because the deal in China for the past 40 years has been that the government can do whatever it likes so long as regular Chinese are getting richer. So the regime can lock up dissidents, it can run a corrupt treadmill linking the Communist Party, big business, and military-owned ventures, including, by the way, what the South China Morning Post terms the, quote, #1 nightclub in Beijing because of its beautiful hostesses and high prices. They can do all this so long as the economy keeps growing gangbusters, so long as jobs are plentiful, incomes are rising, and Chinese parents can look forward to raising prosperous kids. Now that deal, that economic mandate of heaven, is in doubt. I mentioned in recent videos how growth under President Xi has barely cleared 5%, which is rather average for a developing country and is deeply disappointing to Chinese who have gotten used to decades of miracle growth. Then came the ham-handed COVID flip-flop, where hundreds of millions of Chinese were locked up like rats, lined up every morning for a daily COVID test, or hauled off to mass camps. Then, in the face of public complaints, the government declared victory out of the blue, instantly flipping from mass internment to pretending it never happened. That clarified for many Chinese that Beijing does not know what it is doing, and that it is failing to know what it's doing in a very clumsy, indeed a very dangerous way. So what is next? If the Chinese people lose faith in their government, they will keep cutting spending and investment, which shrinks the economy even more. China's labor force is already shrinking. The private enterprise is pulling back while foreign investment dries up. China is trying to stimulate, but that risks devaluation, a weaker currency, which could drive massive capital flight overseas, while any stimulus piles yet more debt on top of China's $50 trillion mountain. So they are backed into a corner. Meanwhile, China's youth unemployment hits record highs, piling up political tinder for the blundering but hyper-aggressive President Xi to pour gasoline onto. Okay, we'll be watching. See you next time.